The latest economic and business news during the coronavirus pandemic. High-flying tech stocks stumbled sharply on Thursday, causing the S&P 500 to close with its worst drop since June. The S&P 500 dropped 3.5%, wiping out more than a week of gains, while the tech-heavy Nasdaq Composite was down nearly 5%. The Dow Jones Industrial Average briefly lost 1,000 points and ended the day down more than 800 points. Apple was down 8%. Amazon was down more than 4.5%, and Microsoft was down more than 6%. As investors have bet that the coronavirus crisis would amplify the dominance of the tech companies' business models, share prices of large-cap technology companies have surged, generating the lion's share of the stock market's gains. The rip-roaring race for tech shares has increasingly pulled in armchair investors, who have taken up speculating on stocks amid the work-from-home environment. Many of those traders have opted not to buy actual shares, but instead to speculate in options trades, which are essentially leveraged bets on where share prices will go. Such traders make these bets, mostly they have been calls, or bets that the tech share prices would rise, with options dealers, who then have to hedge their risks. Dealers hedge their risks by buying puts, or leveraged bets that shares will fall. Analysts say dealers have rushed to boost their bets on falling shares in recent days in an attempt to hedge their risks, amplifying the sell-off in technology shares. I think today for tech stocks, you're seeing that dynamic play out. You have a sell-off that is being chased by dealers, said Yusuf Abbasi, director of U.S. institutional equities at StoneX, a brokerage firm. Stocks had been on a significant tear in recent days. Prior to Thursday, the S&P 500 had been up in 9 of the last 10 sessions, a run that some observers said suggested that investors appeared to have adopted a Pollyannish outlook. Stocks were extended, complacency and optimism, widespread, William Delwich, an investment strategist at Baird, a financial firm based in Milwaukee, wrote in an email. Given the speed of the move and imbalanced positioning, the cart doesn't need to go over much of a bump to send apples flying everywhere. Thursday's tumble was one of the worst jolts to the market since a new bull market began in late March. Since March 23, when the Federal Reserve signaled its willingness to provide unlimited support to key financial markets, stocks have notched remarkable gains. As of the close of trading on Wednesday, they were up 60% over that period, helping pull the market to new record highs. The performance of the market, the S&P 500 was up more than 10% for the year as of Wednesday's close, has been a conundrum for some who have wondered whether such gains were sustainable in the face of a deep economic decline set off by the pandemic.